What's up, everyone, and welcome back to the Babalian Money Show. Today, we're diving into a topic that so many of you have been asking about: how to make millions in the stock market, especially if you're just starting out. Now, before we get into the nitty-gritty, a quick disclaimer. I am not a financial advisor, and this video is for educational and entertainment purposes only. The stock market involves risk, so always do your own research and consult with a professional before making any investment decisions. Okay, with that out of the way, let's talk about building serious wealth. The idea of making millions can feel like a far-off dream, but I'm here to tell you it's more achievable than you might think. It's not about get-rich-quick schemes or risky day trading. It's about a solid long-term strategy. The first and most crucial step is to simply start. The biggest mistake people make is waiting for the perfect time to invest. Spoiler alert, that time doesn't exist. The best time to start was yesterday. The second best time is right now. You don't need a huge amount of money. Even starting with $50 or $100 a month can grow into a substantial sum over time thanks to the magic of compound interest. So, where should you put your money? As a beginner, it's wise to avoid picking individual stocks. It's like trying to find a needle in a haystack. Instead, focus on low-cost index funds, or ETFs, which are exchange-traded funds. Think of them as baskets containing hundreds or even thousands of stocks. For example, an S&P 500 index fund gives you a small piece of the 500 largest companies in the U.S. This automatically diversifies your investment, which means you're not putting all your eggs in one basket. It's the simplest and most effective way for most people to get started. You're essentially betting on the overall growth of the market, which historically has always gone up over the long term. Now, let's talk about the mindset you need. Investing is a marathon, not a sprint. The market will have its ups and downs. You'll see green days, and you'll definitely see red days. The key is to not panic. When the market dips, it's often a buying opportunity, not a time to sell everything. Successful investors stay consistent. They have a plan and they stick to it. This strategy is called dollar cost averaging. You invest a fixed amount of money at regular intervals, say every month, regardless of what the market is doing. This approach removes emotion from the equation and ensures you buy more shares when prices are low and fewer when they are high. Over time, it averages out your costs and can lead to better returns. Let's do some quick math to see how powerful this is. Let's say you invest $500 a month. If you achieve an average annual return of 10%, which is the historical average of the S&P 500, after 30 years, you'd have over $1 million. And a huge chunk of that is pure profit from compound growth. Your initial investment of $180,000 would have grown into $1 million. That is the path to becoming a millionaire. It's not about being a Wall Street genius. It's about consistency, patience, and letting time do the heavy lifting for you. To get started, you'll need to open a brokerage account. There are tons of user-friendly apps and platforms out there like Fidelity, Vanguard, or Charles Schwab that make it incredibly easy. You can open an account in just a few minutes, link your bank, and start investing in those index funds we talked about. The most important thing is to automate your investments. Set up an automatic transfer from your bank to your brokerage account every month. Treat it like any other bill. Pay yourself first. This discipline is what separates casual savers from serious wealth builders. So to recap, start now, invest consistently in low-cost index funds, stay diversified, and be patient. Don't let fear or the complexity of the market hold you back. This is the blueprint that has created millions of millionaires, and there's no reason you can't be one of them. We'll dive deeper into specific funds and strategies in future videos. So if you found this helpful, do me a huge favor and hit that subscribe button and turn on notifications. You won't want to miss what's coming next. Thanks for watching the Babalian Money Show, and I'll see you in the next one.